Good morning, everyone, and thank you for joining us on Morning Markets from True Potential. Firstly, this morning, I'd like to just say thanks to everyone that's been subscribing on the YouTube channel. For those that haven't, please just do click to subscribe. That'll ensure that you get all of the excellent content that True Potential is publishing straight into your YouTube feed. So then just looking at asset markets yesterday, European markets returning after the Easter market holiday played a bit of a catch-up with the better performance that we'd seen in the US on Monday. The strength of the US really did follow that economic data that Chris touched on yesterday. The strength both in the services PMI but also the employment report that was very strong. That left US markets really, they didn't really do very much yesterday. Little change when we look at the S&P 500 and the Nasdaq on the day. I think also it's worth probably noting that the equity markets themselves in the US certainly have benefited from a degree of more stability in the sovereign bond market. And indeed, yesterday we did see yields coming in quite a bit, 7 basis points to about 166 on the US 10-year. I suppose it's a little surprising. Strength of the economic data, the bond market coming in as a result. But then do remember that we've seen quite a significant move in sovereign bond yields over the past 6 to 8 weeks. I think the other thing just to focus on today really is the IMF statement yesterday in their World Economic Outlook, which they publish on a very regular basis. But it was interesting yesterday just to note the scale of the revisions that they have continued to make to their economic projections, both for this year and for next year. So if we look at this year, in terms of global growth, the expectation now is for some 6%. That was from 5.5% at their last review. And then if we look out into next year, 2022, 4.4% from 4.2%. So continued improvement in the growth outlook in terms of the work that the IMF are seeing. I think when we dig down into that a little bit, it's also worth noting where that revisions are coming from and where that positive growth impetus is really working its way through. Very much the US, where US growth has been revised quite significantly from 5.1% to 6.4%. And that's a big driver of that overall revision when you think about the scale and the importance of the US economy in the global economy. We've also seen a slight revision to their forecasts for China as well, moving up to 8.4% from 8.1%. Again, two of the largest economies seeing revisions, driving that overall improvement that we've seen there. I think the other thing just to discuss, and it really brings to life a number of the points that we've been making over the past number of months. What are sort of some of the key drivers there? The rollout of vaccinations, the speed of which that is moving forward in a number of geographic regions, but also thinking about the additional levels of fiscal support that are there. So we've discussed the US in terms of the stimulus package, but then we have the infrastructure package as well. Those are all things that are positive, both in the near, medium and longer term from an economic growth perspective. The other thing to just touch on is really the differences in policy and how that's been implemented in a number of different countries, and particularly the challenges that this might present for some of the emerging and the developing world as we move further through this situation. And really, do they have the policy flexibility that some of the developed market countries have? So there's one of the divergences in the report is really that contrast between developed markets and some emerging and developing markets. So that's something I think is worth following over, indeed, the medium to longer term, to see how the pandemic leaves the economic situation in emerging and developing worlds versus developed. Just also yesterday on the economic data front, we had the Caixin, the services PMI in China. Again, that showed a good month-on-month improvement to 54.3 from 52.7. Ongoing improvement in services there coming through. And then in the US, we had a job opening report from Jolt. That really just served to reinforce the positive trends that were mentioned in the employment report on Friday. In particular, the opening up of the hospitality and leisure sector, where there are a significant number of vacancies at this point in time, feeding into that improvement that we touched on at the end of last week within services in the US. I'll leave it there at the moment, but as I said at the beginning, please do subscribe on our YouTube channel. Many thanks.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.